Welcome to While We Were Distracted, the podcast where we explore topics that often get overshadowed in the rush of daily life.
Welcome back, everyone. Last time, we laid all that groundwork, explaining what Basel III is, why it even matters.
We talked about creating a more resilient global financial system, all those goals.
Yeah, and we touched on its impact on things like bond yields and those currency markets.
Uh-huh.
But today,
Today we bring it home.
let's bring it a little closer to home
Closer to home, yeah.
and talk about how Basel III affects you, your wallet,
Exactly.
your pocketbook.
Yeah, so one of the most direct ways you might feel the impact of this whole thing is through interest rates.
Okay, so interest rates, things like loans, savings accounts, that kind of stuff.
Exactly, because banks need to hold more capital, maintain that higher liquidity under Basel III.
So that safety net, those fire drills we talked about.
Exactly, yeah, and those things come at a cost.
Right.
And banks, they often pass those costs along to us, by adjusting those interest rates.
So are you saying Basel III could actually make loans more expensive?
It could, yeah. It could mean slightly higher interest rates on your mortgage, car loan, things like that.
So if I'm thinking about buying a house or a car, I might end up paying a little bit more because of Basel III.
It's possible, yeah. It's
Yeah.
all about that balance, that risk and return.
Okay.
Banks need to comply with these regulations, but they also need to attract borrowers.
All right, they've got to stay in business.
Exactly.
So it's like this ripple effect, right? Basel III leads to higher costs for banks, which could lead to higher borrowing costs for, well, just regular people like me.
That's right.
But what about the flip side? What about the interest we earn on our savings?
Yeah, that's where things get a little bit more nuanced.
Okay.
While it's not as direct, there can definitely be an impact there as well.
Okay.
So if banks are having to pay more to borrow money themselves because of these requirements,
Yeah.
they might be less inclined to offer those really high interest rates on savings accounts to attract deposits.
So potentially lower returns for savers.
It's possible, yeah, but gotta remember, the whole point of Basel III is to prevent another financial crisis.
Right.
And a stable financial system ultimately benefits everyone in the long run.
Okay, so it's kind of like taking out an insurance policy, right?
That's a good way to put it.
You pay a little now to avoid potentially a much bigger problem down the road. Okay, so we've talked about interest rates, but how does all of this affect, like, investing? Does Basel III have any impact on the stock market or other types of investments?
It's less direct than that impact on interest rates, but there are definitely connections. Remember we talked about how Basel III can affect those bond markets?
Yeah.
Well, those ripples, they can spread to other areas of the financial system.
Okay.
So let's say bond yields go down.
Right.
Investors, they might start looking for higher returns elsewhere, potentially pushing up stock prices as they shift their investments around.
So it's all interconnected, like you said before.
Exactly, and this interconnectedness is really key to understanding how Basel III operates on this global scale.
Yeah, and we keep saying it's a global rule book, but are there differences in how it's implemented in different parts of the world?
Oh, absolutely. While those basic principles are generally the same, different countries have adapted Basel III to their specific needs and circumstances.
Okay, give us some examples. How are different regions approaching this?
Okay, so the European Union, for example, they've taken a particularly stringent approach, especially after their sovereign debt crisis a few years ago.
So they're really like doubling down on stability.
Yeah, exactly. They've implemented even stricter capital requirements for certain types of banks, particularly those deemed systemically important.
Systemically important. Those are like the too big to fail institutions, right?
Exactly, you got it. The EU wants to make absolutely sure those big banks are well capitalized and can withstand any future shocks.
Yeah, playing it safe. What about other regions? How is Asia adapting to Basel III?
So Asia, particularly places like Singapore and Hong Kong, they've been at the forefront of adopting Basel III.
Oh.
They see a stable and well-regulated global financial system as, well, essential to their own economic success.
Right. They want to be seen as these reliable players on the world stage.
Exactly. So they've implemented those new rules very diligently, often exceeding those minimum requirements set by the Basel Committee.
Okay, so they're going above and beyond, not just meeting the standards.
Yeah, they're really taking it seriously.
What about other parts of the world? Is everyone on board with Basel III?
Well, adoption has been a little more gradual in regions like Latin America and Africa.
Okay.
Their financial systems might not be as developed or as complex, so they're facing different challenges in implementing these new rules.
So it's not a one-size-fits-all approach. Everyone's kind of moving at their own pace.
Exactly, and that's another key takeaway about Basel III. It's a framework that encourages adaptation to those local contexts.
This whole global implementation thing is really fascinating, but I'm guessing that such a massive undertaking is bound to spark some debates and disagreements, right? Like,
Sure.
what are some of the main points of contention around Basel III?
Yeah, so one of the biggest debates is about its potential impact on economic growth.
Ah, that classic trade-off between stability and growth.
Exactly right. And we talked about that earlier, but as a reminder, Basel III requires banks to hold more capital, maintain that higher liquidity,
Right.
and this can make them more cautious about lending, a little bit hesitant.
So if banks are lending less, that could theoretically slow down economic activity, right?
Potentially, yeah. And, some critics are also worried about the complexity of these regulations.
Yeah, I mean, it's a whole global rule book. It can't be that simple.
It's not, and some argue that this complexity makes it difficult for banks to actually comply with all the rules and for regulators to supervise them effectively.
So it's not just about what the rules say, but also about how they're actually put into practice.
Exactly, yeah. And then there's another layer of debate surrounding the specific risk weights assigned to different types of assets under Basel III.
Okay, risk weights, remind me what those are again.
So basically, they determine how much capital a bank needs to hold against a particular asset based on how risky it's deemed to be.
Okay.
So a riskier asset gets a higher risk weight, meaning the bank needs more capital to back it up.
Got it. So the debate is about whether these risk weights are actually accurate and appropriate?
That's right. Yeah. Some argue that certain asset classes, like investments in infrastructure, are unfairly penalized with high risk weights.
Okay.
And this could discourage banks from lending to these important sectors of the economy.
So it's all about finding that right balance between, managing risk, but not stifling investment in key areas.
Exactly. And it's a complex issue.
For sure.
And the debate's likely to continue as the global financial landscape keeps evolving.
Well, this has been an eye-opening look at this global impact and these debates surrounding Basel III.
Yeah, it's been a journey.
We've gone from those general principles to specific examples of how it's being implemented around the world, the various challenges and those controversies.
Lots to consider.
Yeah, and it brings us to our final part. We've seen where Basel III came from, where it is now, but where is it going?
The future.
The future. Exactly.
Mm-hmm.
Make sure you're back for part 3 as we dive into the future of Basel III. All right, welcome back, everyone, to our deep dive into Basel III. We've covered a lot of ground, from its origins to its impact on global markets, those debates and controversies surrounding it.
A lot to think about.
But now we want to look ahead, right?
A future.
The future of Basel III, so crystal ball time.
Yeah.
Can we even predict what's going to happen with something as complex as this?
Well, predicting the future with absolute certainty, it's impossible.
Especially in the world of finance.
Especially in finance, things change so quickly.
That's true. The only constant is change.
Mhm.
But based on what we're seeing now, current trends, can we make some educated guesses about where Basel III might be headed?
Absolutely, yeah. One likely trend, I think, is further refinement and adjustment of the regulations.
Okay.
Remember, Basel III, it's not just the static rule book.
Right.
It's a dynamic framework that needs to adapt to a changing world.
So it's like a constantly evolving operating system for the global financial system.
That's a great way to put it, yeah. Regulators are continually monitoring its impact, gathering data, looking for areas where those adjustments might be needed.
So they're kind of staying ahead of the curve.
Trying to.
What are some specific areas that might see some changes or adjustments?
One area is those risk weights we talked about earlier,
Okay.
how much capital a bank needs to hold against different types of assets.
Yeah.
As new asset classes emerge and the global economy shifts, those risk weights, they might need to be reassessed.
To keep up with the times.
Exactly.
Are there any other areas that you think are kind of, ripe for change?
Another big one is the treatment of fintech and digital currencies. These disruptors.
Fintech giants, the cryptocurrencies, all that.
They're changing the face of finance, and Basel III needs to keep up.
Yeah, how is Basel III adapting to these new players?
It's a tough challenge because fintech and digital currencies, they operate so differently from traditional banks.
Right.
Regulators, they're working on integrating them into the existing framework,
Okay.
but it requires new approaches. You can't just copy-paste the old rules.
So they're kind of building the plane while they're flying it, trying to figure out how to regulate these new technologies as they're evolving.
That's a good analogy. It's uncharted territory in a lot of ways.
So there's not even really a clear roadmap for how to do this.
It's still early days, yeah.
Okay, so we've got risk weight adjustments, we've got the integration of fintech on the horizon. Any other big trends that we should be keeping an eye out for?
One more, the growing focus on climate-related financial risks.
Climate change and finance. That's an interesting connection. How are those two linked?
Yeah, it might seem a little surprising, but climate change actually poses very real risks to the financial system.
Okay.
Think about the impact of those extreme weather events
Yeah.
on infrastructure, property, supply chains, all of that.
Right.
It can lead to massive insurance claims, loan defaults. It hits banks right where it hurts their balance sheets.
Wow, I hadn't really thought about it that way. So you're saying that Basel III might actually start incorporating climate risk into its regulations.
That's the direction things are headed, yeah. Expect to see more concrete guidelines emerging on how banks should assess and mitigate those climate-related financial risks.
So banks will have to start factoring in things like hurricanes and droughts when they're making lending decisions.
Exactly. It's all about recognizing and managing these new types of risks.
Wow, that's a big shift. Okay, so we've got refinements to those risk weights, fintech integration, climate risk on the agenda. Any other overarching trends, big picture stuff?
Yeah, the tension between standardization and flexibility.
Standardization versus flexibility. Okay, explain that one.
So on the one hand, there's this push for global standardization of banking regulations.
Okay.
Makes things easier for banks operating across borders,
Agreed.
helps regulators compare risks more effectively. Everyone's playing by the same rules.
Right, more transparency, more predictability.
Exactly.
I
But
bet.
on the other hand, we have to acknowledge that different countries have their own unique financial systems and challenges.
Right, so forcing everyone into the same mold might not be the best approach.
Right. So there needs to be some room for adaptation, customization of Basel III to fit those different national contexts.
So finding that sweet spot between global standards and local nuances is the ongoing challenge.
Exactly.
It's a balancing act.
It is.
But ultimately, it seems like the goal of Basel III is to try to make the global financial system safer, more resilient,
That's the core mission, and that benefits everyone, really.
even if we don't see those direct effects every day.
Right. Think of it as a financial safety net that's always there, working in the background to protect our financial well-being.
That's a good way to put it. Well, I think it's time for us to resurface from our deep dive into Basel III,
Yeah, we've explored a lot.
from its origins to its future challenges and opportunities. But like any good deep dive, we've probably surfaced more questions than answers along the way.
And that's the beauty of it. The more we learn about finance, the more we realize how much more there is to discover.
So keep those questions coming, listeners.
Definitely. Stay curious. Stay engaged.
Don't forget to like and subscribe for the next episode on While We Were Distracted.